Hey, I'm Dan Fitzpatrick at StockMarketMentor.com on Monday, ugly January 27th. And I want to look at Apple tonight. This is where the stock's trading. And my bet is, I'll just say it, my bet is that 500 bucks is going to hold tomorrow. I could be wrong, but you know what? I'll be there watching, baby. I have no position in the stock or options. I don't trade this anaconda over earnings because it could just as easily, the stock could just as easily have been at 600 bucks. And why do I want to go through that grief? Why do I want to go through that agony to where, and volatility was off the chart, so I guess you could do a straddle or a strangle or something like that and really have some fun. But I would just rather trade the counter trend here. So the stock's way down. No way I'm going to short the stock tomorrow and just watch for it to go lower. That's just typically not what happens with these big stocks. I don't know if the stock will bounce, and if it does, how much, but I'll definitely be watching it. Now, here's the thing. Apple's still in an uptrend. Again, I'm looking at 500 bucks as probably look, if you're looking to buy, would you say, oh, if it gets to 498, I'm going to buy, or if it gets to 501.73, I'll buy? No, you're going to look at it and go like, you know what, if this puppy falls to 500 bucks, I'm in. So I think that's going to be a level. Now, I want to mention something to you, and I'm not dogging on anybody in particular, except the guy who was on CNBC, and I don't know his name, so I guess he's no one in particular. The company gave weak guidance, and they had iPhone sales that were below estimates. So the stock tanks. So what's this guy doing on CNBC? He's defending it, saying, well, it's cheap. Well, it's cheap. Do you know what? I wasn't born in the day. I was going to say I was born in the day, but it wasn't yesterday. But I was actually born in the night, but it wasn't last night. People have been saying Apple was cheap up here at 720. They're saying it's cheap all the way down. They're saying that it's cheap all the way up, and now this knucklehead is saying, oh, Apple's cheap here. Don't buy that crap. And I guess I could pound the table and say it again, but here's the point. You don't make money on whether the company is cheap. You make money on whether the stock trades in your favor or not. And when somebody's defending the stock, saying that it's cheap, that is a loser defending his position, and there's no other way around it. That is a loser defending his position, saying why he owns the stock. Oh, because it's cheap. If the stock was cheap at 550, then it's got to be really cheap at 507, right? But that's not the case. The market is in price discovery. That's what the market does. It discovers prices. You know, there's an agreement in price. I forget, one of our members pointed this out to me. They mentioned this, I think, and it was a quote by somebody, and I don't know who it was. Maybe it was the guy who's saying Apple's cheap. But it's an agreement about price and a disagreement about direction. Okay, Apple is trading where it's trading. That's the fair value. That is the fair value. When you listen to these knucklehead fundamentalists, they're talking about the company. Dude, if you want to buy the company, go get your bazillions of dollars together and go buy the company and make a low ball offer and get it cheap. But this stock has been in an uptrend. So do you know when it's cheap? On these pullbacks. You know when it's expensive? Okay, on these rallies. Now, would a fundamentalist tell you that? No, they don't know a chart from starts with an F. They don't know that stuff. And if they do, then they're just ignoring it. The bottom line is this stock is in an uptrend. It's now printing a lower low. Okay, this is a broken uptrend. We can look at it on a yearly basis and probably find a nice uptrend. You can look at it on a 5-minute basis and find a downtrend. You can find anything you want in these charts. But what I'm suggesting is that you just use it as a function of risk management. You look at levels. If you're long the stock and you're taking it in the shorts, buy the shorts, so to speak. Just wherever the price opens up tomorrow is where it opens up. Don't just rush and hurry up and sell it because you can't take the pain. You're going to sell this thing at like 507, and it's probably even going to be up from here tomorrow morning. Do you know why? Oh, because Apple's cheap. No, because the stock's way oversold now, and it's still Apple. They still have a boatload of cash, so you'll probably see some dip buyers coming in. So if you're long the stock, don't sell it. If you're long calls, and I'm sure some of you are, you like to buy them lottery tickets. If you're long the calls, particularly out of the money, because those are the lottery tickets, you're going to find that the implied volatility is absolutely sucked out of the price of your options. But even then, the stock's likely to rebound at some point. If it hasn't rebounded in the morning, then it's not going to rebound. So, we should see a lot of action between about 9:31 and about 10 o'clock Eastern time. So just watch what happens here. Don't sell it. Look for 500 as a potential line of support. If the stock falls below 500, don't catch that falling knife. Just let it go. Also, one other thing on, quote, cheap. Okay, I'm so laughing. Like, again, that's the argument that losers make. Amazon, is this cheap? 386. Is it expensive? Okay, do you know what the PE of Amazon is? Just go to Yahoo Finance and look it up. It's 1,400. This company has never booked a profit. Now, they make boatloads of money, but they just reinvest it back in to their businesses. This company has never made a profit in its entire existence. Never. This is what the stock looks like. Okay, was it cheap back here? You know what? By this guy's metric, it was expensive. Too expensive to buy at $1.70. Now it's up at 386. I'm sure it's still too expensive to buy. So the point is, don't pay attention to the fundamentals. Pay attention to the technicals. And is it that easy? It pretty much is. Okay, members, get over to the strategy session. I actually do have some things that I want you to be looking at to get involved with tomorrow.